Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. I've been doing some research on my own, thinking about if there was a stock market crash, what does it mean for individual stock prices? So I'm going to share some of that research with you here today. Today we're just going to focus on the FAANG stocks. And if you guys like it, I got a whole bunch of others down there broken into like tech stocks and things like that. Happy to do more crash videos if you enjoy it. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please seek the advice of a professional before taking on the risks of the stock market. But if you do enjoy stock market analysis and videos like this, then make sure you subscribe to the 40 Finance channel. I post here 3 or 4 times every single week. So make sure you sign up to get notified. And if you haven't already, sign up for my email newsletter, link in the description, and I'll send you my free PDF stock market analysis guide. Lots of great tips and free resources in there to help you research better. All right, so the purpose of this video is to kind of project ahead. What if we did have a stock market crash here in 2020? What would things look like on an individual stock basis? And right now, the way I'm looking at things, it's going to be much more of a PE ratio crash than it is going to be an earnings crash. So far, a lot of the most popular stocks, particularly the FAANG stocks, have performed pretty well in the economic climate, and they continue to post solid earnings per share. The real run-up in the market has been on the PE side, with investors basically saying, hey, we're willing to pay more per earnings for each share of stock, likely because with low interest rate, there's not as many investing opportunities. You've also had, with the lockdown, a lot more interest in the stock market, particularly from the younger investors or the Robinhood crowd, and that has helped drive up demand as well. And so it's important to call out that for today, we're just going to use the EPS for each stock today, and we're going to manipulate the PE so that we can try to determine what sort of price we would have if there is a stock market crash. And you don't always know why a crash occurs, but I think we have some interesting catalysts on hand, and you can see I labeled them out here. We obviously have the election. There could be pre-election uncertainty. There could be post-election uncertainty. That one, quite frankly, could go in a million different directions. Then, of course, world health news is very important right now, and we've already seen it affect the stock market several times, and we would expect that to continue. Then jobs reports, those have been trending along fairly well, although job growth is slowing. If you saw any sort of reversal or major reversal in job reporting, then that would be a scare as well. And then I included at the bottom, earnings week of 10/19 is very interesting because you get a lot of big names. I put some tickers there: Amazon, PayPal, Visa, Netflix, McDonald's, Tesla, Microsoft, Twitter, Intel. A lot of big companies in there. Since the market is hot and PEs are running high, investors are going to be looking in that week of October for a lot of reassurance that things will continue to trend in the way they're currently trending. If for some reason a few of these big companies come out and say, no, actually we see stuff slowing, then you would expect a correction of some level in there. All right, so as I mentioned, for these FAANG stocks, we're going to look at each one. We're going to take the EPS today. We're going to look at the trend of PE over the past several quarters, and we're going to project a target PE. In almost all cases, the PEs for these stocks have run up considerably higher just over the past few quarters. So we're just going to take what would the average PE be and see how that would affect the price as of today. All right, first one on the board is Amazon. Starting in the top left, you can see that the price today is $3,190. And right next to that, the current EPS is $26.04. And the PE today is at 122. Follow your eyes down to the yellow box. You can see what the PE has been doing over the past several quarters. And off to the far right, I've put my PE target of what I think would be approximately fair for Amazon if we saw the market come down. And for me, you're in that 88 range. Follow the arrow below 88, and that would bring the price down to $2,432. That's minus about $750 off of today. All right, so just to be clear on the math, Amazon today, PE ratio of 122. That's where it is today. If there were a crash, I would speculate that Amazon's PE ratio would come back down to a more normal level. The number I chose was 88, and that's based on historical data. If you take their current EPS of 26.04 and you multiply it by my PE target of 88, that's where you get that stock price of $2,400 plus. So EPS doesn't change. That's a fact. That just is what it is. That's how much the company makes in earnings. PE does change, though, based on market demand. In a market crash situation, though, you're going to have a lot of people selling off, so demand goes down and PE goes down, and that's how we landed at that number. Now let's take a look at the rest of the FAANG stocks. All right, again, starting in the top left, Microsoft, current price of $208.76. Off to the right, you can see their current EPS is $5.76. That makes their PE today of 36.24. You look down at the yellow box and eyeball across, and my assessment is a solid PE target would be around 30, maybe 29 in a good scenario if you could get it. That would bring today's price from 208.76 all the way down to 172.80. That's minus $35 off of today's price. All right, let's take a look at Google. Current price today, $14.8236. Current EPS of $45.49. That makes their PE today of 32.58. Check out the yellow box again. You can see they've traded in the high 20s pretty consistently over the past several quarters. So I put a target PE of 29. Honestly, that could be 26 or 27 if you could get a dip down that far as well. That puts your price at $13.1921. That's minus $160 off of today's price. All right, let's take a look at Apple. And Apple is a little bit of an ugly situation, to be honest, because they've had a significant run up here lately. Current price today of $115.24. EPS for Apple after the stock split is only $3.30 per share. PE today of 34.92. You look across the yellow box, and honestly, Apple is traded at 20 or below PE pretty consistently. So we are running hot right now at a PE of 34.92. If you bring that down to my target of 20, look at that, guys. Apple drops to $66. That's minus $60 off of today's price. You know, that's almost cutting it in half. So that's a pretty bold statement. But if you just follow the numbers, the model sort of tells you if PEs or demand for Apple were to drop back to historic levels, that's precisely where you would land. All right, last one in the FAANG stocks. We got Netflix at $511.87 for today's stock price. Their EPS is $5.92, which makes the PE today of 86. Across the board in the yellow box, you can see that, interestingly enough, Netflix PE has been coming down, even though their earnings have been going up. So the interest in Netflix has been waning a little bit from an investor perspective. I put a PE of 75, and that would actually be the lowest PE Netflix has ever had, at least over the past few years. But I'm just seeing, you know, investor interest waning on Netflix, and so that's why I picked that number. That would drop your price down to $444, which is minus $67 off of today. All right, so if you think about that analysis, you have Apple far and away as the most expensive and therefore the most likely to get hit harder in a big crash. And it's not necessarily that we don't think Apple is not going to do good things in the future. It's just the fact that there's a lot of fat on that one now. Amazon pretty much comes in right behind it, though not nearly as bad. The projected drop with Amazon would be about 20%, so it was a strong number too. And on the flip side, you sort of have Netflix, which PE from a historical standpoint is actually as low as it's ever been. I think the mindset for investors right now with Netflix is there's just not enough shiny objects. They want to see this huge growth. There's a projection, that how much growth do they have left. In my opinion, they actually have a decent chunk of revenue growth left. And then you have the whole international market that they're still trying to dig into. Not to mention they can still pull that lever of a price increase, which I think that they're actually doing heading into maybe Q4, something like that. So if you've ever had interest in Netflix, it might be time to study up a little bit on that one, because of these FAANG stocks, at least in a crash perspective, they probably have the best opportunity for you to get in at a deal if you would just want to go by basic valuations. All right, guys, so that's my FAANG stock crash projections for 2020. Let me know if you enjoyed this, and I'll share the sectors and the other stocks that I've run this on. I think it's pretty interesting. It's always good to have a feel for the price you would pay for something if there was a big correction. And with all the potential volatility in the market right now, I think it is definitely good to have a plan written out in your mind of where you will invest if prices come down. Thanks for watching. As always, don't forget to sign up for the email list to get your free stock analysis report. We'll see you on the next video.